bit more about the consumption side of things, because if we strip out the base effects, do you actually see any kind of meaningful pickup in consumer spending, or we're poised for some kind of reversal given some of the flare-ups we've seen in COVID cases?
Okay, so to avoid the distortion of base effect, we take a look at the 2-year compound range to gauge the strength of the economy and also the consumption. So in the past few months, we have seen a slow and steady pickup in consumption, which is basically consistent with the relaxation of some restrictions. However, we think even for May, we think that the underlying momentum of retail sales, which is a proxy of consumption, should be slow, considerably below the pre-pandemic level, because on the one hand, we still have some restrictions over some consumer activities evidenced by the travel data during the Dragon Boat Festival, and at the same time that I think the pandemic has hit the poor group harder, so which actually curbed their consumer their purchasing power.
Yeah, let's talk a little bit more about that, because there seems to be conditions that perhaps support more of a recovery than what we've already seen. The job market seems to be stabilizing. Incomes are also rising as well. Is this more than just some of the COVID flare-ups or the COVID disruptions that we're seeing? Is there something more permanent in the changes that we're seeing in consumer behavior now?
So first of all, I think that the pandemic is still, of course, a major disruption to consumer activities. Secondly, you said that the job market seems to have recovered very well, but that is when you look at the so-called surveyed unemployment data. But if you take a look at, say, the number of migrant workers working in the cities, that actually declined by 2.5 million in Q1 this year, comparing with the Q1 to 2019, which indicate that the job market has not fully normalized. And also, if you take a look at the median income growth rate, it's slower than the average income growth rate, which indicate that the low-income groups, that their income were hit harder by the pandemic, and they actually have higher consumption propensity.
But Jacqueline, when you take a look at household income, I mean, data from the first quarter reflects a 13% rise already, yet consumption is pretty muted. I'm just wondering, when do you see consumption then being the key driver for growth as opposed to investment?
Okay, I think in second half this year that consumption will get stronger thanks to very rapid rollout of vaccines. So with that, we think that some of the restrictions might be further lifted. Secondly, I think income growth will continue to recover alongside the steady economic growth, but in second half, we think investment growth momentum might slow a little bit, especially because of the tightening measures in the private sector, as well as the government's campaign to curb local government implicit debt, which we think will weigh on infrastructure investment growth in second half this year.
Of course, China is tweaking its policy in terms of that three-child policy. How much impact will that have on the economy, Jacqueline?
Well, we think it might help marginally. We are expecting some like 500,000 to 1 million newborns in the next couple of years because of the three-child policy. But we don't think it's going to revert the downward trend in birth rate in the medium long term. Say women aged from 20 to 39 is going to drop by as much as 25% in the coming decade. And also experience from our neighboring countries like Japan and South Korea shows that once the fertility rate drops to a very low level, it's very difficult for even like supportive measures to boost the fertility rate. So we don't think the policy, unfortunately, is going to change the big picture about demographic outlook for China for the next decade.